Are stocks meant for you? Let's find that out. Hello and welcome to BSC's Investor Education Awareness Series. Today we look into what you need to know before you dip your feet into equities. See, most people who say they lose money in shares do so because they probably don't know about the economic and investment market cycles. An upbeat market cycle is because of various economic factors such as a growing economy, more jobs, and growing infrastructure, which all leads to better prospects. But on the other hand, when there is a rise in inflation, the prices of goods go up and the country's GDP growth can slow down. During such a time, the value of your stocks, your portfolio, could also dip. So now that you know that a stock market rises and falls, the next thing you should also know and keep in mind is not to panic. Never panic. That's the message. If the price of your shares has gone down, do not get rid of them in a hurry. That's a very bad thing to do. You can continue to stay invested if the company's fundamentals are strong. But the best part about a stock market low is that it is the right time and opportunity to buy stocks because prices are low. Pick a few stocks and invest in them gradually. Invest small amounts in stages, stagger that out, and over a period of time you'll be able to average the cost of acquiring those stocks. Remember, even the most experienced investors cannot predict how and when the market will perform. Doesn't happen like that. I hope that these tips will go a long way in you getting to know what you need to know about shares and the stock markets. And before I leave you for today, one more bit of financial advice from a top-notch expert. Take a look in.
I think they are. I think they can actually form part of the overall kind of investment portfolio for most investors. I think, where investors kind of tend to kind of get a little bit kind of tied down is taking decisions which maybe hearsay on stocks. I think if you just sometimes take a bit of time, effort on some stocks, not all stocks, just to kind of investigate what they are. And some of it's not, it can be common sense. I mean, years and years ago, when we were all buying Apple phones, it wasn't, it doesn't take much to think that this is going to be very big in the future. So therefore, be able to invest in Apple at that time would have been a great investment. So sometimes it can be also common sense in terms of what you're seeing around you, what trends you're seeing, and what products you might be buying or places that you're visiting, like hotel chains and so forth. So all of this can be part of your own experience as well, not just from advisors. It can be from your own experiences.